You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan Rose. Just looking at my Discord community. Someone just posted they just sold QXO for 313%. So welcome everybody. My name is Jonathan Rose. This is Masters in Trading Live. I get on here live every day the market's open, 11 a.m. Eastern Time. I've done nothing but trade my entire career. I've traded the Chicago Board of Trade, the Chicago Mercantile Exchange, and I learned how to value options to the penny at the Chicago Options Exchange. Chicago Board of Options Exchange, SIBO. So here we go. I got no sound? Oh no, the sound is not working. Can we get a sound check? Can we get a Y in the chat if the sound's working for you guys? I think the sound is actually okay. Telvin, our sound okay? Sound is okay. Sound is good. Perfect. All right, sorry about that, guys. Ooh, glockenspiel. Sound is good. Okay, we got a really cool show for you guys today. I want to talk about volatility. Going into the summer, volatility is going to be the most important component for all traders. Even those traders without any options experience, you need to learn about volatility. So that's what we're going to talk about today. Okay? June options just expired. Those had the earnings in them as well. So right now we're going into the summer. Historically, the slowest time of the year. So I want to educate you on volatility because without a doubt, that's the most important lesson right now. So that's why we're going to talk about it. Let's go over to the screen. I got the questions up. Whatever questions you want to answer, I'll stay on, make sure I get all your questions answered. But I do want to go over my slide deck because I got some important things with you to share. We're going to start with volatility. Thank you. Chris Warder just gave me the thumbs up that we're loud and clear. All right. Volatility 101. Are you guys comfortable with volatility? Is volatility something that confuses you? Okay, because before I understood volatility, it was always, I thought I understood it, but not so much. A little water. And Mr. Pen. Where's my pen? Okay. So let's talk about volatility. Super, super, super important. All right. I got you, Debbie. Volatility 101. Why stocks hate uncertainty. When stocks go up, volatility goes down. Okay? When stocks go up, volatility goes down. When you are long stock, it's like being short volatility. It's a smooth ride, confidence. When stocks go up, there's no trouble. Everything is beautiful to the upside. Market behaves somewhat predictably. Investor comfort grows. Think of it like the calm seas. There's no waves, easy sailing, just a lovely day, right? You're paid to take risk, but upside doesn't scare anybody. That's what happens when volatility goes down. And we can follow volatility with many different ways, but the fear index, the VIX, is a 30-day measure of volatility. Okay? Most important takeaway. When volatility goes low, stocks go high. Okay? Now, when volatility, and let's call VIX volatility. VIX is a 30-day measure of volatility. We could also measure volatility in 9 days, and 23 days, and 60 days, 90 days. Right now, we'll talk about 30 days though. When volatility, or the VIX, shoots up, it goes sky high. Stocks go down. When volatility goes up, stocks go down. When volatility goes up, the VIX, the fear index, there's more uncertainty. So there's wider expected price swings. Because of that uncertainty, people don't know where to value stocks. So there's wider price swings. Big institutions might start reducing exposure. Selling might accelerate. It's like the fog rolling in on the road. Everybody hits the brakes. Everyone starts getting nervous. Higher volatility, more fear, more risk of downside moves. Keep things very, very simple. When volatility comes out of the market, stocks go up. When there's more uncertainty and volatility comes into the market, stocks go down. Keep things very, very simple. Final slide on options. So volatility. Now this is so unbelievably important that I just make sure you know this. This is something you need to learn, whether you have options experience or no options experience. Whenever you buy an option, you're long volatility. When you buy an option, that also means buying an option is buying a call or buying a put. Both are long vol. Okay? So when you're buying an option, you're long volatility. You're betting the underlying will move a lot more than expected. Okay? More uncertainty whenever you buy options. It works great in chaotic, uncertain. Ooh, look at this one. News-driven markets. I've been trading for 27 years. Right now, this might be the most news-driven market that I've ever been a part of, and I've traded throughout everything that's happened going back to 1997. Thinking, buying insurance, you want something bad or big to happen. So you could think of options as buying insurance. Buying calls or puts, you want movement. It doesn't matter which one, you want movement. The other side. When you sell options, let's say you sell options. When you sell options, you're short volatility. You're short risk. We can call it that. You're also short uncertainty, right? So when you're short vol, if you sell a call, if you sell a put, if you do any kind of credit spreads, just like this would be debit up here, okay, you're short vol. This is not complicated, but it's something that I need you to learn. It's so freaking important, okay? You're betting things will stay quiet or go as expected. You collect that premium, but risk gets bigger if things move too much. You don't want movement. Think this way, you are the insurance company. You profit if nothing happens. So selling options equals short vol, and you want calm. Okay? Does that make sense between being long and being short options? I'm going to build on this example. Can I just get some whys? Does this make sense? Yes, yes, yes. Or if you have an N, ask any questions you want. And just to reiterate, long options, a debit, a straddle, a strangle, just long a call, just long a put. You're long vol, you're long uncertainty. When you're short, you're taking in all that premium. Okay? Yes, yes, yes. Super important. We're going to build on that. We need your participation for this one, guys, because right now, June expiry just went through, and we just had earnings in June. So I have a question for you guys. It's summer. This past weekend in Chicago, it was 100 degrees. Summer is here. So it's summer. Markets are historically quiet in the summer. So right now, we only want to buy options when there's movement. So the question I have for you guys, if we only want to buy options in sectors that are in play, that are moving, give me some sectors that are in play, guys. Where do we want to buy options? Here's somewhere we don't. PayPal, Meta. They need a reason to move. What sectors right now is there uncertainty? And they need to stand out. Because if you can't name a sector that there's uncertainty, you should not be buying options in that sector. All right, I got some answers coming in. Debbie, energy. Ernie, nuclear. Adam, oil and gas. Yes! Right now, okay, U.S. got involved in Iran. Iran's threatening to shut down the Strait of Hormuz. Oil, refiners, uranium is nuts. Solar is nuts, right? AI, quantum. Those are areas where you may want to consider buying volatility. I made a chart for you guys. Take a snapshot of this, or you can just watch the recording. These are sectors that I believe are in play. Let me label those. These sectors in the news, let's call them, right? In the news. News. Oh, why that was so difficult for me. So what do we have? Ooh, interesting. Cruises. Cruise liners? Well, this is what I'm going to go with. Right now, uranium. Okay? Uranium is absolutely wild. Here, let's pull up a uranium chart so I can show you. And a great example of how crazy uranium is you can look at LEU. Okay? When stocks move this fast, nobody knows where to value them. So right now, LEU, CCJ, these are areas that markets are moving really, really fast. Maybe you would consider doing an option trade. Okay? What other sectors? Uranium, oil refiners. We've been trading oil refiners quite a bit. Oil refiners are strong. Solar, drones. Look at that Katos going crazy, trading up to 45. AI and quantum. So right now, I tried to back in what are really standing out. What sectors are in the news? I like metals. Metals, yeah, kind of dying down a little bit. Silver cheap to gold. But when I think of going into the summer, you have to be super careful about where you buy options. These are the areas that I want to buy options, or I want to consider buying options. Other areas that aren't, like 3D printing right now. I don't know if I want to buy options in a 3D printing company. There's not a reason for that movement. So this is really important, guys. Going into the summer, make sure that you're only buying options in areas that have movement. Next topic, I'm going to move to a stock that I've been sharing with you and that we're going to make a trade in right now. It's down a little bit, but that's okay. Next topic, guys, I'm going to talk about QXO. Because QXO, we shared this trade with everybody. And here's the trade right here. QXO, we shared 1 month ago. And we shared, here's the entry date. We shared this for everybody at 1686. Today, let's cover our QXO position. So for everybody who's been watching for the last month, we also have options in our paid Discord community, but we did this for everybody. Let me get a show of hands, guys. Who's been involved in QXO? Just to show anybody who watches this back. Who's involved in QXO? Who still has exposure in QXO? We are going to close this trade. Cover QXO in for 1686 last month. And then right now, let's get on prints. Get out at, I don't know, better than 2350. Bought and sold, I am. Good for you. Yes, 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 yes. Wade here It has November 20 calls, the August calls up 144%, up 257, up 322, up 32%. Awesome, awesome, awesome. We absolutely crushed QXO. For anybody who wants to take those winning profits and join us in the mastersinTrading.com/challenge 2025. Why did we do this challenge? Let me tell you why we did this challenge. I go around YouTube and I watch some videos on options, and I think a lot of them, most of them, are absolute garbage. So what I decided to do is I built this challenge. And I built this challenge, and here's Dewart saying some comments about the challenge. You guys can read them. I won't read this to you. But I started this challenge because I believe if I took the time and did the videos, which I did, it was very laborious. It took a whole bunch of time, but we're finally done. I believe that I could take anybody without any options experience. Even if you do have options experience and you've had a bad time trading options or a bad experience, I'm going to want you to forget everything you've learned and start fresh with me. But I did this challenge because I have no doubt that I could take anybody without any options experience to having a complete and comfortable understanding of how to trade options. And if you have any questions, our Discord community helps you answer any questions. Here's what Tom says. What makes your service special is the teaching tools and the Discord group, and it's small. A service with 100,000 subscribers and the trades go out and it's free for all is a mess. The smaller teaching service and community will get you ahead in the long run. Like you say, the creator trader wins. I see creative traders working together win more and more. Hey, Eric. Eric saying, should we hold shares long? You mentioned shares going to $44. So full exposure, in our Discord community, we have positions in QuickSo. We have them in our all access. We still have open positions. And in our advanced notice, I think we have an open position too. So we still have open positions in QuickSo, but if you're on here and you're just long the stock, we are covering the stock. So in our community, and I'll show you guys because this is one of the most talked about stocks in our community, but I couldn't imagine if you took this QuickSo trade, why you wouldn't want to join this community, because look at this, QXO, 122 results in our Discord community, with the oldest one being when I originally just shared this trade. So since 521, see, this is the trust I want, guys. So this is the conversation in our Discord community that we've been talking about for the last month. So if you do have additional questions, this is something that we talk about every single day. So join us, Eric. Hopefully you're in the community. I believe you were at one point. Hopefully you still are. Hey, Mike, AJR did not appreciate your comment. What? Miko, I'm sorry. Hey, JR, did not appreciate your comment. I did not do anything without integrity, and the QXO trade was shared on here, and I was not on silent in Discord. All above board. Miko, I'm sorry. I don't understand your comment. I'd love to answer your question. I just don't understand your comment. But, guys, that's what we got. I'm live here every day. If that volatility lesson was confusing at all, watch it back. Join us tomorrow, too, and just leave a note in the comments. And if you have any questions about that volatility lesson, ask. I want you to learn it. It's really important. The takeaway is going into the summer, we don't want to load up on a lot of options. We don't want to have high-risk positions. The only place where you should look to buy options is areas that are quote-unquote in play. A great example of names that are in play are those uranium names, LEU. Look at that stock. Look at the refiners. Look at quantum. Those are areas that are in play. Be really careful buying options in the summer of names that don't really have a reason to move. For everybody in All Access, I got a brand new trade that we're going to go over right. 1 second. I want to time this right now.